right, guys, Minh Vo here with Verus Financial. Let's get right into it. I'm here to talk to you today about money markets. 15 minutes or less. Let's go through the details and how it all works. All right, disclosure. Please go ahead and visit our website for our full disclosure. Very important stuff here. I'm not giving you financial advice, just giving you information. So what is a money market? All right, so short-term borrowing lending. A money market basically is a mutual fund that puts investors' monies together and invest in short-term debt instruments like treasury bills, which is basically the government letting you, obviously utilize some of their money, commercial paper, and CDs or certificates of deposit, right? Typically a very liquid account. Maturities are pretty low, obviously, and it's great for short-term borrowing, short-term lending to other people, right? So what is the purpose of a money market, right? So back in the day, right, so call it prior to 2008, interest rates were fairly high, meaning that 4 or 5%, obviously in the 80s and the 15s and 16%. But, as most people who are now in their mid to late 40s understand it and remember, there were 4 or 5% savings rates, right? Well, obviously from 2008 to 2022, that really kind of all changed, right? The financial crisis happened, we dropped interest rates. COVID happened, we dropped interest rates again. And most recently, as inflation has really crept up quite a bit high, the Fed has raised interest rates. And what does that mean to you? What that means to you is that you have to be more intentional and more focused on making sure that every dollar you have is working a little bit harder for you, right? To battle that pesky kind of word, inflation, right? So the banks right now, what they basically do is take your money, they invest it in money markets, they put it in money market accounts, they earn 4, 5, 6%, right? Not 6, let's say 4 or 5%. And they basically then obviously keep the difference between what they pay you in interest and what they keep, right? So that's how banks are making their money, right? In this instance, I'm hoping that you figure out that you can cut out the money, the middleman, which is the bank, right? Because they don't offer the best interest rates, right? Again, typically I see 0.1, 0.2, maybe 0.25, but you're not seeing a full 4 and 5%, right? So basically, this allows you to basically participate directly in the money market nowadays. And obviously with the advent of technology, it's not as difficult to access nowadays. Go to any of your financial institutions, they all offer it. Obviously we offer one as well. Not we directly, but we offer it through a organization, right? So let's talk about pros and cons, right? Pros, better interest rates, obviously. Again, if you had 10,000 bucks in a savings account, it would probably earn you 0.01%, right? Which is not a bunch. Or you could put 10,000 bucks into a money market account and get about 500 bucks, right? And 0.01 on a $10,000 account is basically $1 a year, right? It's easy to access your money. So if you needed the money, you can obviously do one of 3 things. Obviously transfer it on your online application to get it back into your bank account so you can utilize it every day. Some and probably most accounts that are money markets allow you to have a debit card and even a checkbook, right? So write yourself a check or use your debit card, right? Good for short-term savings like a new bike or a field trip or something like that. Okay, let's talk about the negatives, right? So I started the business way back when in 2006, and back then we used the word guarantee, but no longer can we use that word. Why? Because in 2008, the primary reserve fund fell below $1 for the first time in its history to 97 cents. And since then, that has obviously changed the industry for us to not be able to use the word guarantee. But in terms of risk barometer, it's probably one of the lowest risk places you can park money and earn a 5% interest, right? When I say low risk, pretty much, again, it's outside of this anomaly in 2008. In the history of money market, it actually has not gone down below $1, right? So let's talk about short-term goals, right? Think of your money market as a discount tool. Everything you buy is on discount. by 5%. Your new video game for your kiddo, birthday gift for a friend, a trip to the zoo with the family, a 5% discount if you put that money in the money market, right? So if I ask anybody if they take 5% off, I don't care how nominal the dollar is, nominal the amount is, or how small the amount is, people are still going to take the 5%, right? So, or let's think about long-term goals. Let's think about you're going to make a down payment on a house, get your first car for your child or for yourself, or get a dream vacation. And this is really key too. First car for anybody, right? So I think even teenagers at this point have a huge opportunity to earn some cash, right? If they're earning cash, they can obviously invest in the money market and get 5%, right? Now, same thing, I tell people, if you're going to put a down payment on the house, and let's say your down payment's $100,000, so if I said you could reduce the cost of your down payment by $5,000, would you do it? Absolutely, everybody would do it, right? If I could save $5,000, I would do it. So same thing with your vacation, right? If I said your tickets are, 5% off, everyone would jump on that idea. So everyone should really consider having a money market account, right? So how to use money markets, right? It's basically a piggy bank. And what I tell people is if you use everyday cash, right, that kind of bill type money, that money stays in your bank account. That's great. But beyond that, pretty much mostly everything can be shifted to money market, right? Your emergency fund, your savings, your extra money, your just in case money, your let's go have fun money, right? All that money can be used inside of a money market. Why? Because again, you can get a debit card for it, you can get a checkbook for it, you can transfer it online outside of your account within a day or so. That money is there in your accounts, right? So why not get the 5%, right? It's literally people going, here's, if you had $100, we're gonna give you an extra $5 and it's just laying on the ground. Pick it up, right? So getting your money when you need it. This is the biggest question people always ask me. Is it liquid? Is it available? How do I access it? And I couldn't say it any easier than, again, log on to any financial institution website, transfer the money, get a checkbook, get a debit card, and take it out for yourself, right? What other questions do people ask me? Is there a penalty for taking the money out? The answer is no. Will I get taxed on this money? Yes, you will get taxed on the interest, right? So if you earn 5% interest, you will get a tax form at the end of the year, a 1099 INT, and that's nothing more than just a tax form, right, that you will get so you can take it to your accountant or upload it to whatever online software that you use to do your taxes. Be able to help you calculate that tax. What is the tax rate that people ask? The tax is basically whatever your income tax rate is, right? Because it's interest income. So that's important. What else is there? Oh, here's a fun little tidbit. People always ask me, are there tax-free money markets? The answer is yes. There are tax-free money markets as well, where they're investing into, different things, but there are tax-free versions of money markets as well. So if you're not interested in getting a tax, well, you will still get some tax paperwork. But if you prefer to not have added income, then you may consider and opt for a tax-free money markets. What else is there to talk about with money markets? Okay, well, the other thing that I get asked all the time is, when I put the money in the money market, is it protected? It is protected by the SIPC, the Securities Investment Protection Corporation. It is not protected by the FDIC, right? So do understand that. Now, the other thing I would always encourage people is they always ask me questions like, well, how is this compared to a high yield savings, right? High yield savings is through the bank, right? And obviously the bank takes a little bit off the top for the assurance that it's FDIC and for the assurance that they're guaranteeing some of those assets, right? So it's just important for you to know the difference there, and is it worth the risk? And if in your mind you're too risk adverse to even do that, that's okay. Go with a high yield savings, better than doing a regular savings, right, where you're getting a very nominal interest rate. So let's talk about money markets. Are you ready for it? Okay, so if you're ready for it, research. I would always say check with your financial advisor, see if it makes sense for you, see if it's the right fit. For some people, money markets may not be the right fit, right? Look for accounts with high interest rates, low fees, very simple. Next thing, gather your documents, meaning social security, proof of address, all that good stuff. Gather, obviously other documents, which is a way to deposit the account, which, your bank account statements, whatever the situation is, and sit back and earn some interest. Again, rates are approximately 4 to 5% nowadays, and that's real money back into your pocket to fight current challenges that are facing your family today and yourself personally, which is high inflation, high cost of everything. So there you go. In less than 15 minutes, we've covered money markets. Thanks for coming, and check out our next course.